Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolio and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, tonight I'm going to introduce you to what I will be talking about in tomorrow's live stream. As usual, at 1:30 Eastern Time on Wednesday, I do a live stream for about 2.5 hours plus, and I'll be going through a lot of details, and we have the Fed meeting coming up today. But looking back on yesterday, we had retail sales come in, missed a bit, but if we look at the last 3 months of performance, retail sales on an annualized basis are like up 50.5%. We had car sales up 90% if you look back just the last 3 months and annualize them. We're just seeing sales off the map. Clothing up 145%. We're looking at food and drinks up over 100%. And this is just some phenomenal numbers. I've been doing this a long time, and I can tell you I've never seen anything like this. This is quite phenomenal. Also, along with the FOMC meeting minutes tomorrow and the conference call, we're going to see housing starts come out. They're expected to show 1.62 million units. I think we're going to miss on this again. Everybody seems to be pulling back from the housing. We've watched lumber drop about 40% off of its highs. I'll go through a lot of detail on that tomorrow. There's a number of reasons why that's happening, but it's not necessarily all negative, but I do expect to see some stabilization. The other thing is Atlanta Fed came out, updated their GDP projections. We're looking at 10.5 GDP. Everything that we can look at right now is boom, 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 right? And meanwhile, this is important to understand as we come into the Fed report tomorrow. What is the Fed looking at, and why are they keeping their foot on the pedal if everything is running so hot right now, including seeing producer prices come out at 0.8, 9.9% if you look at just the last 3 months. But if you look at a year over year, it's 6.6%. So this inflation is really running hot. The Fed's going to tell us it's transitory again. Maybe it is. There's a few more months from now, and we're going to proclaim that it's not, I believe. I'd still believe this is not transitory. There's a lot of elements that are going to stay high. For instance, if you raise salaries, you're not going to be able to lower them later, so those are going to stay in play. A lot of folks have had to raise their minimums just to get people to work again. And then everything else with supply chain issues and other aspects of the shortages, the inflation is likely to stay higher. I'll go through this in great detail tomorrow. The big question is, what is the Fed's looking at? Will they start any type of taper? I've suggested over the last week that I think they could cut back in the MBSs or mortgage-backed securities. Maybe it would cause mortgage rates to go up a little bit, but I don't think it's going to be material. There's still mass movement around the country happening, and a lot of hot areas are going to continue to stay hot. Even if they cooled off just a little bit, things will still remain in a very robust position. The last thing I'll mention is that we did see some selling coming into our database. I've been mentioning I have a little concern about some of the things that are happening in the database, and we're starting to see some risk come into the markets next couple of days, and in an intermediate basis, the next couple of weeks are going to be really critical as far as the trends go and whether we can continue to move higher and hopefully get above 4,300 on the S&P. So let's go ahead and take a look at the charts, see how they're set up for Wednesday, and I look forward to seeing everybody at the live stream at 1:30 New York time tomorrow. Just like in last night's video, I'm going to roll through these markets very quickly since we have the long live stream tomorrow. So as we look at the database, as I mentioned in the opening comments, that there were 673 sell signals, 300 buy signals. It was a 2-to-1 ratio sell to buy, so it's a negative ratio, and this put the percent bullish back to 60.06, below that 62% level. As I mentioned, I think it's going to be very critical the next couple of days. And the one thing that I'm seeing here, which is bringing in a lot of concern, is as we've churned up here above 4,200, we've not really been able to get any material traction in the short-term database. The longer-term or the intermediate database remains at 75%, but it has much different characteristics at this stage of the market. The concern is that there is no real material traction getting us above 68 to 72%, and this could set up a tone for a pullback before we start to move higher in this pattern. First market I'll cover is the S&P. We're looking at the futures, very quiet overnight, volume 39,215. We're flat on the session, 4236, down 0.25 on the session. PPMs are very neutral, no real movement here. PPM2 is starting to look a little positive, but nothing really there that is likely to tell us much about what's likely to happen for today. We look at the market grid for today. A minimum will be S1, R2, which would be a 4230, 4248. That key level will be, the key level on the downside will be 4230. If that's penetrated, then it will very easily move down to 4224, 4218. Overall, my expectation is for an S1, R2. This is a typical position here, especially with PPM2 turning up. As we look at SPX, we should see the PPM2 turn up today, but the market grid actually turned down slightly on the cash. And this is, like I said, in the database overview, this is setting up some minor concerns. We could start to move back towards some of the moving averages. 4212, 4200 on the S&P would be a minimum move on if we start to see some weakness. And there, as I said, there is some concern. Also, we're seeing the market grid very narrow here. S1 for today is 4244. So looking on the cash, more of an R1, S2, and it may end up to be an S2, R2 day. If we, with the Fed coming out, we're likely to see a kick up in the volatility. The next market I'll cover is the NASDAQ. It's up 11 handles overnight. We did see a bit of a reversal yesterday after printing into a new high at 14,155. We saw a reversal and it closed at 14,021, which was negative on the day. The action overnight is slightly positive, but what we're looking at is the key level in this pattern now is the 10-period moving average, 13,878. I don't see us getting below that level. PPM2 is accelerating, it's at trend level. PPM1 is at trend level, both above 0.25. Final market that I'll cover tonight is gold. As I mentioned in last night's commentary, I think that the 1844 level is going to be the extreme in this pattern. We should remain above the 200-day moving average, which is 1850. Last trade, 1861. We are seeing a slight positive overnight. The 40-day moving average is at 1851. It's going to be our primary demand line. We should start to move back towards the 10-day moving average at 1881. This will complete the video for tonight. Thanks for watching. We'll see you at the live stream at 1:30 New York time. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks that you do, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over, will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.